Hi guys, welcome back to my channel. It's been a while, but it is a new year, and today I am going to go over our mortgage pay down for 2021. My name is Ellie, this is Planning and Finances, and this is a personal finance channel where I talk about everything that can help save you money in the running of your home, which means keeping more money in your pocket for the fun stuff and for things that you actually want to spend money on. So I'm going to talk about our mortgage today. So we overpay on our mortgage, and this is for two reasons. One, to pay less on interest. I don't want to give the bank that money. And two, to reduce the term of our mortgage. We would love to be mortgage free by 50, which is 10 years away now. I am going to be hitting the big 4-0 this year. So no more talk about that. Let's get into the figures. We're going to get straight into it. So at the start of last year, so January 2021, our basic flat rate payment on our mortgage was roughly €994. So we decided then that we're going to keep overpaying our $1,300 a month overpayment, which worked out at 1,329 cents a month. And we did that for the whole year. That brought us to a total overpayment for the year of €3,756. So while this is not a huge figure, we're very happy with it. And the standalone of paying that extra in a year is not just that we saved €3,756. We potentially saved €65,000, and that's huge. Now, that isn't just for this overpayment alone. That is if we continue overpaying by the $1,300 a month for the rest of the entirety of the mortgage, we would save €65,000. But that's huge. That's like 65,000 less that you're going to pay to the bank. Like, what could you do with 65,000? And it will also shave 7 years off our mortgage. It will bring us down to be mortgage free roughly around the age of 52. So we're hoping to get some extra payments in there somewhere and be mortgage free by 50. But let me run through the rest of the figures with you now. I'm just going to look at the figures because I can't remember these off by heart. Our opening balance in January was €187,423.61. So the payments that we made all together, so all the money that left our current account and went to the bank, was €15,603.48. This is made up of two parts. So some of it goes off the principal of the loan, which is the loan itself, and some of it goes to the bank as interest paid. So first of all, the principal payment was €10,662. So this is actually how much we reduced our mortgage by. So getting over the 10,000 was really good this year. So then the interest that we paid this year was €5,002.86. Like, this makes me so happy that our principal payment was nearly double what our interest payment has been, because when you start paying your mortgage, that is so not the case. And it's shown us that all the overpayments that we have been doing is finally starting to show, because we're paying the lesser rate on interest at the moment. So if we take our capital payment away from our opening balance, our closing balance is now €176,822.99. We had two goals this year for our mortgage, and one was to reach 175,000. So we were a little shy on that. And the other goal was like a stretch goal, and it was to pay 18,000 into the bank. So we were off by $2,500 for that. So even though we haven't met our goals, we're still completely happy. I went part-time during the year, and then in November I quit my job. So from December, just last month, I have no income from my full-time job. So This is why we didn't make any extra overpayments. We would normally save up extra money that we received throughout the year, and then at the end of the year decide what to do with that. Like the video that we did last year, we saved money on utility bills and we decided to put that off the mortgage. But by putting money off your mortgage, it means it's money you can't get back. So if you are going to overpay on your mortgage, you need to think about that. So we decided it was better to keep a bit of a cushion in our current accounts while we figured out our finances with being on one wage. At the moment, we're a one income family, and then I have my small business. So I currently have never taken any money out of my business. So it's just been a lovely hobby. But this year I am planning on taking a wage out of my business. For next year now, we are going to continue paying the $1,300 a month. It's going to be tight. And if it does become too tight, we might reduce it down to $1,200 a month. But we are hoping to keep it to $1,300 a month. Our stretch goal for the life of our mortgage is to be finished paying our mortgage by 50 years of age. So that gives us 10 more years. If we continue paying our mortgage at the moment by paying $1,300 a month, we'll be finished paying by 52. So that's why the extra payments and the little extra push that we do, that is to get us done by 50. So we're going to try as hard as we can. I'm going to side hustle my backside off, and I am going to put a lot more into my business over the next year. So with that, talking about putting more into my business and giving more to my business, Krishna has challenged me to bring in €1,000 a month. So this is big. Like at the moment, I don't bring anything in a month. Money has come into my business account, but it's also gone back out again as I reinvested back in the business. So I'm going to do my income tax returns, and hopefully then I can see how much I can take out of the business. So I'm going to start with taking 200 out a month, and hopefully in the next few months I can build that up to €500 a month, which you can see is still small, but it's great that it can add to Krishna's income. So please help me in getting towards that 1K a month, and I would love it if you could hit that subscribe button and help me reach that 1,000 subscriber mark to get monetized here on YouTube. So thank you very much for watching. If you'd like to check out any of my other videos, this one here is this video from last year, so what I paid in 2020, and this is a video on why would you overpay on your mortgage. Thank you everybody. See you next time. Bye.